Just how frustrating is this market, Lisa, when you look at things like all the rate cuts that are being priced, yet at the same time there is this feeling that we will continue to live with durable growth?
Yeah, so look, I think there are a lot of conundrums in this current market. And I think that probably the single most frustrating thing is the benchmark at this point. You know, most institutional investors, most retail investors define the market as the S&P 500 index. That index, as we know, is up almost 8% year to date, up 17% from last October's low. But certainly for the last, 4 or 5 months, a huge portion of that move, at least, since January 31st, has essentially come from 7 stocks, the mega cap tech stocks, who led for most of the prior 13 years, what we, I think affectionately nicknamed the FANGs, or FANGs M plus whatever. And I think what has been frustrating is that underneath the surface, a lot of the indicators that are flashing recession have crushed the cyclicals. We've seen the devastation of the regional banking system as the Fed has raised rates and as the implications of tightening have begun to show. And yet there's that benchmark, supported by that heavy concentration at the top, chugging along, when below the surface, there seems to be, some pain and suffering and damage. Small caps in particular have been crushed.
So, Lisa, the question we've got to ask then is, can this persist? And if it can't, what would bring down some of the big tech heavyweights that have supported this market?
Yes, I think the reality is that in the short term, it can persist. Certainly as long as we're, kind of in this stalemate, I think, to your point, between, some labor market resilience, the power of pricing power, and some of the nominal growth drivers that can support some of those names. Now, ultimately, our thesis has been that, there are no companies that ultimately are immune from recession or significant economic slowing, and we don't think that this time ultimately will be different, even though it has felt that way at moments. So our best guess continues to be that there are some earnings disappointments out there. I mean, one of the things that folks have to digest is that the way earnings are modeled, it looks like we're on a hockey stick towards recovery over the next couple of quarters, with this first quarter that's being completed representing a trough in earnings growth, and then we kind of get year-over-year earnings that are better and better every quarter until we get to 2024, where the market's looking for up 13% earnings. Now, we're still very close to peak economic growth and peak corporate profit margins. So that's going to be a feat to achieve those expectations.